So good afternoon. I almost said good morning there to everybody. Thanks for joining today's Munch and Learn. Hope you've got your lunch out, you're chewing on your sandwiches or eating your sushi or whatever else it might be. The next 20 minutes or so. My guest, Sharon Cook. Thank you for joining us, Sharon.
You're most welcome. Nice to be here.
Is going to be helping us talk about raising finance, SME funding, all the things you need to think about in order to be able to borrow money, whether you're a startup or actually whether you're a more established business. And Sharon and I work together on a number of occasions where we're raising money for all sorts of different things. And so at the end of this call, if you have a need to talk about finance of any description, then drop me a note or drop Sharon a note directly. I will circulate the note you see on screen, and I will circulate Sharon's details post this as well. So great to have you with us, Sharon. Thank you very much.
Thank you. Nice to be here. Nice to be here.
Appropriate day, right? The budget is out today. The new budget is out today. Some good things in there, I think, to help kind of stabilize the economy. But there are a lot of people out there right now who are looking at their bank balance and going, is this enough to get me through? Do I need to raise some more? So what's the first thing that you need to consider if you want to borrow money in today's market?
So if we're doing on a startup or we need money, so I think the first thing that we need to understand is where you are as a business.
Mm-hmm.
So if you're a startup, so a startup is considered 3 years or less. So anything 3 years or less is considered high risk. Startups are high risk. And I think what's going to happen as well with the budget and with people, businesses having to tighten their belts and maybe lose some people, I think people will think about starting their own business and going on that journey. So where are you in the cycle? Are you pre-revenue? Are you starting? Are you over 3 years? How old is your business? All those things will really make a difference as to where you can go for your money.
Yeah.
Do you want me to cover where you can go for a startup quickly now?
Ooh, that'd be lovely. Yes, please. Yeah, perfect.
Okay. So my first piece of advice is don't put your home on the line. So one of the biggest things that you'll have is you'll have people out there that say they'll give you money as long as they can secure it against your house. And they'll do that at a price, but also you're risking quite a lot. So my first bit of advice is if you can, avoid doing that at any cost. But have a look at the startup loan company. It's British Business Bank money. It's 6% fixed APR over 5 years or up to 5 years if you want to take it that long.
Yeah.
And per director, you can take up to £25,000 to a maximum of 4 directors.
Okay.
So it might not sound cheap, but it's fixed.
Yeah.
And it is really cheap for startup money. So high risks, but really cheap there. So it's personally backed by the director technically, but because this is British Business Bank money, reputationally they can't really do very much. If it all goes wrong down the line, they want their money back, but they're never going to do anything that's very forceful. Okay. But it's a really good way of doing it. It's complicated and there's a process, but it's worthwhile looking into. And and friends and family, they're the other good ones. Yeah. Although if you're anything like my family, they'll be a proper pain. But that's a really good source of money, of course, to come in. So that, in a very quick nutshell, because we haven't got long, that's where I'd be looking to start up.
So just to recalibrate, so under 3 years, you can get a startup loan. Is there the maximum was 25,000? I think you said
per director to a maximum of 4 directors.
Okay. So you could theoretically start a business and get 100 grand's worth of funding right from the outset at 6% over 5 years.
Correct.
Okay. That's pretty incredible.
Yeah, it's quite compelling. Yeah. It's hard to get 100 grand, but can be done.
Alternatives to that, Sharon? So if you weren't going for a startup loan, traditionally, of course, most people go to their bank and talk to their bank. I've got a great idea. Here's my business plan. What's the likelihood of a bank lending you money on the basis of that in today's climate?
Not. I mean, I was trying to think of a more positive word than not. It's not going to happen. A bank will not lend because it'd be forecast-led lending.
Yeah.
So what a bank will do is they will look at 2 things. They will look at your historical performance.
Yeah.
And they will look at your future performance. Now, it's entirely possible that the Recovery Loan Scheme, or RLS as people might know it, will morph into something more along the old Enterprise Finance Guarantee loan
Okay.
So if you've got experience in a sector, like loads of experience, and you get an opportunity to either take over a business, start a business, that EFG loan would have sat in that space.
Okay.
We don't have it at the moment because it's part of the RLS. That's what we've got now.
Yeah.
But it is entirely possible that the RLS may morph into that. So a startup but with huge amounts of experience and probably a trading base
Yeah.
may be able to get access to that money moving forward.
Okay, because that's an interesting one, acquiring a business, because again, there are a lot of businesses for sale at the moment for various reasons, and so that might
Absolutely.
be an easy entry into the market. Okay.
But people have to remember when acquiring a business, you have to have experience.
Yes.
You can't be a candlestick maker turned baker.
Oh, shucks, that was next on my list.
Sorry. But these two, you really do have to have that experience, and you have to really prove that you are kind of vital to the business on that. So that would be it. Startups, sadly, are woefully underfunded.
Yeah.
Now, if you are making revenue, there are other things to happen. So it depends. So the other things that you need to think about is what your business does. So I'm going to start with, do you sell stock? B2C.
Okay.
So if you sell stock online, or you have a shop and you have payment portals, could be online portals, could be payment terminals or anything, you can actually get funding via those portals quite quickly at an early stage.
Okay.
So the broad term of these is revenue-based lending.
Okay.
So they look at your sales, they have the history of your sales, they look at your sales and they go, you do X amount per month. And what they technically do is they they buy your advanced sales.
Okay. Yeah.
It's a bit complicated, so it's not technically a loan.
So Shopify is an example of that, right? So you build a Shopify website, you get some traction, you're doing £1,000 a month. They will lend you against your next month's sales, effectively.
Absolutely, they will. Couple of things to think about with these, because they tend to be very cheap. Amazon, Shopify, PayPal. There's 1,000 million others out there, by the way, as well. And they tend to come across cheap. And they'll say it's a 1 or 2% fixed, so that you borrow 10 grand and you pay back 1,200, or whatever it might be, whatever the interest is on that.
Yeah.
But you will pay it back in a really short period of time.
Okay.
So the thing that you need, so it is cheap, and you think, wow, I've borrowed 10 grand, it's only cost me £1,000, for example, or 500 quid. It doesn't really matter. And you think that's really cheap money. It is, unless you have to pay it back in 2 months.
Right.
So the question is what do you have to pay back over what period of time, and can your cash flow going forward sustain that?
Yeah.
But if you're turning your stock, so if you are borrowing 10 grand and you are going to sell that stock within a couple of weeks, then of course paying it back is easy, and you can keep borrowing it. It's a really cheap way of doing it.
Okay.
But if you're going to buy stock and it's going to take 6 months to turn, that is really going to harm your business. Absolutely. Because your cash flow won't sustain that very short period of repayments. Okay. And I have seen that before. So whilst there's money out there, and it's good quality money, so don't get me wrong, it's just very important to stop thinking about the cost, but think about the affordability.
Yeah. Okay. Makes perfect sense. So revenue-based lending via a portal, an eBay or a PayPal or a Shopify or an Amazon or whatever. That's an interesting one. I didn't know about that. That's a little bit like the whole kind of iWalker scenario, isn't it? Where you can borrow at a very high rate for a very short period of time. But if you don't pay back early, it can cost you a fortune. So
Absolutely. And I think with all of these types of lending, there are ways of utilizing them all to maximize the benefit for you as a business. But if you don't understand their nuances, then it's really hard to know where you can maximize it.
Got it.
So if you're B2B and you have debtors, then it doesn't matter if you've been trading 2 weeks or 10 years. If you have debtors, then we can use those debtors to raise money through invoice finance.
Okay.
So invoice finance comes in lots of different forms now, and I've never been so busy on invoice finance as I am at the moment. I think probably sort of 8 out of my 10 that I'm currently doing this week is invoice finance. It's really turning round. So, but invoice finance, there's a couple of invoice finance that you can do. So you can do your whole book. So you've got your whole debtor book. So all of your debtors, you put that to the invoice finance company, and you can draw down up to 80-85% of your ledger, which gives you the money in advance. So you don't have to wait your 60 or 30 or 60 days, whatever it might be.
Yeah.
That gives you a beautiful cycle of money coming through your business, and it comes at a cost. It's a good cost because it gives you money cycle and you can keep going.
Yeah.
Where it's not a good cost. So I've got a client at the moment that has some really lovely clients, and they are fantastic, and they pay within 7 days, except for 2, and they pay in 65.
Ouch.
So for this particular client, using an invoice finance facility, a whole book, it's just not going to be cost effective in the slightest.
Yeah.
They're going to be paying for something they don't need, which is absolutely what you shouldn't do. But there are lenders out there that will do singular invoice finance, so you can just do one invoice.
Oh, wow.
And you can say, well, this is my Waitrose invoice, or this is my whatever invoice. I'm just going to do this one. And it can be 5 grand, or it could be 50 grand, whatever. Or you can do singular debtor. So you just have one particular debtor that pays you long. So you can just do those.
Right.
And so there are lots of ways of pulling an invoice finance facility together that can be very cost effective for a business.
Very nice.
But again, it's knowing how to utilize your debtor book to do that.
And that's
The
it's an interesting topic, because a lot of my clients their business has been established for a number of years, always refer to invoice discounting as factoring. And of course, in the old days, factoring was seen as the rescue process for a business, not the way you used to grow your business, right?
Yeah, absolutely. And now the challenge we have, I think we went through a period before COVID where people were using SMEs, bigger businesses were using SMEs as their bank.
Yeah.
And they're dictating terms to the SME. And so the SME were like, well, hold on a second, I've got to buy the widget, I've got to make the widget, I've got to supply you with the widget, then I can invoice you for the widget, and now you're going to take 60 days to pay me. Well, my payments, that cycle of money out was just too long. Absolutely. And so these new and really fantastic invoice finance companies have started to pop up to really help with that.
Okay.
So it's not a distressed product, not in the slightest. It's a sensible cash flow solution moving forward.
Love it.
And it also works alongside other debt that you may have in your business. And let's face it, who didn't take a bounce back? Who didn't take a Sybil's loan, at the time when it was needed? Even if it wasn't needed, probably most people took a bounce back loan because it was a gift. A gift. And don't repay it early, just use it. Is my advice. 2.5%, you'll still be looking at that in 5 years time, reminiscing at when money was so cheap. So keep it just for old time's sake. So there's that. The other thing I think to look at is assets. Are you buying an asset?
Mm-hmm.
Or have you purchased an asset for your business? A big one, like something with wheels or machinery. It can be a soft asset too, but tend to be hard assets. Because if you start your business and you go, do you know what, I've got some money, I'm going to go and buy this machine that's going to make my business work, and I'm going to spend 30, 40 grand on it. You've just tied up 30, 40 grand of working capital into something that, whilst it makes you money because you're using it, doesn't really help. So if you've done that and you suddenly think, actually, I could do with some money, you can refinance that asset. So we can go to a finance house and we can say, we have this lovely asset here. They value the asset at the time, and they will give you some money back as a loan, which then you pay back.
Okay.
So it's a nice way of doing it. And again, if you're setting up and you have an asset, or you need to buy an asset for your business, it could be a truck, it could be a car, it could be, I don't know, some scaffolding, it could be anything at all, whatever you're buying.
Yeah.
Again, the question you need to ask yourself is, do I dip into my cash flow and pay for it up front?
Yeah.
Or do I use an asset finance house to help me finance that asset? Because the security is in the asset.
Yeah.
So if it all goes Pete Tong, you're not going to need the asset anyway.
Yeah.
You don't need it, so it means nothing. They can sell the asset, they can regain, and then try and, if there's a little bit left over, try and recover it from you. But they are unlikely to do so because it's not worth their time.
Yeah, got it.
So your requirement is the key. And I must apologise if anybody hears snoring, it's my dog behind me. I've just realised how incredibly loud he is. Snoring,
No, I
not me.
can't hear it, so you're okay.
Oh, good. He sounds really loud behind me, so apologies about that. So think about what you're trying to achieve. That's the question I would be asking. So when you're looking for finance, what am I trying to achieve? What is the best solution?
Yeah.
And is there more than one? So those questions should always be at the forefront, and that doesn't matter if you started your business or if you're established.
Yeah, okay.
It should be that. So I'm aware of time, so I'm going to whiz through the next one.
That's all right.
Not all. Yep. So I think we need to look at lenders and lenders' criteria. So we all know our high street banks, and somebody said to me today, they always take your umbrella away when it's raining and give it back when it's dry. But high street banks will look at you as a business, and they will say, well, how much money are you making? How much money are you going to make us? And do you have tangible security for us to attach our security against? So can we use your house to secure the loan we're going to give you?
Yeah.
That's their basic criteria. Do you not need the money because we'll give it to you? It's probably the question. But all other lenders have different criteria. So when we come outside of the high street, they have different criteria. So when I do a loan for someone or do any finance, we look at the limiting factors to start with, which will depend on which lender I can go to. So home ownership is really important. Some lenders will not lend to somebody if they're not a homeowner, or they will very much, because their personal guarantee is limited.
Yeah.
But it might be, though, if you're going for asset finance, that might not make a difference.
Yeah,
because the asset might be strong enough. Invoice finance, it might not make a difference if your business is strong enough and your debtors are strong enough.
Yeah.
So that's one limiting factor.
Okay.
Credit scores, the bane of my life, credit scores.
Yes.
So, and business credit score is really, really important. We're going to cover business first.
Okay.
When you file your accounts, an algorithm and a computer will take the information, give it to all of the credit houses. They will put it into their system and they will decide their score based on the information that's been inputted.
Okay.
Not based on the information that's been inputted and analysed by a human being to make sure it's correct and it's been analysed correctly.
Is this a computer says no scenario, potentially?
So sometimes I've had it before where we've got perfectly strong companies, they filed their accounts and their credit score's gone through the bomb.
Right.
Because they've not done something. Whatever the transfer of data has happened, it's not happened properly. Okay. And all of a sudden they've gone from a Delphi score, which is Experian, of 98 down to 28. And all of a sudden they can't borrow. So it's really important to check your credit score, your business credit score, regularly, especially after filing accounts, to make sure that it's right. There are people out there that can make those changes, but if they're wrong, you can, if you've got enough hours, you can phone up and get it changed, and you can battle it and get it back up. But it's really important to know your business credit score, and it can make a massive difference.
And going back to small business just for a second, or startups, do they check your credit score for a startup loan for a small business?
No, not for a startup. No, not for a startup loan. Not for, because obviously you've got nothing to check.
Okay.
There's everybody when they open.
Sorry, as in personal credit score, because we've all got a personal credit score, right?
We're just going to hit the personal credit scores now. Okay. So your personal credit score in any situation is really, really important. Okay, so it doesn't matter how good your business is. It doesn't matter a dot if you've got a house. It doesn't matter anything. If you've got a bad credit score, that is going to go against you. They just will not lend. Your conduct as a director, even though they're lending to the business, your conduct as a director is what they look at, and they look at how you conduct your own self. So as an example, really strong business, an emergency loan needed to be happening in their business because they weren't paid. They needed to meet payroll. I thought, oh, this will be easy. Until I found out the director had a CCJ because he was in an argument about some over mileage on a lease car, and they slapped a CCJ on him.
Wow.
Everything else about him was great. So all of a sudden, that CCJ just wipes out all automatic lenders, anything that's algorithm-led. You suddenly have to do a big story. It becomes a big issue. So your credit scores are important, especially important for startup loans. I think on Experian, you need to be about 680 on a startup loan. and no particular adverse in the background.
Okay.
Okay, so it's
Very
just
good. Very
important.
clear.
So there's that. Other things to think about for limiting factors: turnover and net profit. That's something else that you can't come to me wanting £150,000 if your turnover is 100. Doesn't work.
Yeah.
So your requirement needs to be relevant to your turnover, and you must be showing a profit. A net profit is always healthy, and your EBITDA must be strong as well. So it's very important to look at those factors. Debt in business, we covered that a little bit earlier. Bounce back, SIBLs, overdrafts, all those things will have a debt service effect for any other monies that you want to borrow. And B2B and B2C. Weirdly, if you're B2C, it can be harder to fund depending on what you're trying to do. Because you have no creditors, you just have customers.
Buyers, shoppers,
yeah, and they're not. I know we're not loyal people. You know, not when it comes to consumers. They're not loyal, so you can't rely on that loyalty.
Okay, makes sense,
So those factors are all the factors that we tend to look at.
Yeah.
So doing some personal due diligence before going for any kind of funding whatsoever is really important. So business and personal credit. Easy things that you can do. If anybody wants to know their credit score for their business, contact me and I'll give you Experian and Credit Safe, and I can tell you what they both say.
Great.
If you want me to. So it's a bit of a thing. Clean bank statements, business and personal, clean bank statements, no bounces. Bad management of money means that you probably won't get money.
Right, okay.
Okay.
Yeah, I'd never considered that, but you're absolutely right. If a couple of payments go out and then come back in because there's not insufficient funds or whatever, that's going to be a red flag.
Yeah, and so many people say, "Oh, it's because we didn't move money from our savings account to cover that."
Yeah.
Well, you know it, so your conduct isn't conducive of somebody who's reliable to lend money to. That's how they think. Okay. Know your numbers. That's really important. Know your numbers. How much do you need? Do you know how much it's going to cost you to sort of repay? Do your cash flow numbers work? Yeah. Importantly, is the amount of money that you're going for going to do the job?
Yeah, okay.
Under capitalization is as bad as over.
Yeah, massive challenge, yeah.
So you'll have that one. Is it viable? Does it seem that when you are sitting there and looking at it, does it seem like a viable request? Sense check it before you put it into a lender, because if you think, but I wouldn't lend to me on that level. They probably wouldn't either. Does the money give you the return that you need? It's just so important to understand that, because whilst it might get you out of a hole, if it doesn't give you a return, there's no point.
Yeah.
There's other solutions if it's just digging you out of a hole every couple of months. Okay. It doesn't work. So those things I would be saying, those are my basic checks that I would be doing as a business owner, and making sure you got P&L, balance sheet, all up-to-date financials, in some cases a cash flow forecast to support what you're trying to achieve, because it shows you've got a handle on what you're doing.
Yeah.
Okay. So 2 more points. Don't use Google. Don't do it. Google my tooth hurts. Google my tooth hurts, and you'll come back with cancer. Don't use Google. Don't use Google. And there's a couple of reasons why I say don't use Google. I think it's a really good tool to look up lenders and to explore a lender to see what they're like. But what happens is the lenders that come up the top of the biggest advertising budgets. Where do you think that money comes from?
Yeah.
It comes from the fact they charge really high interest rates. And so they have really high budget. So, and they will give you the headline interest rates. So my favorite one I've seen recently is loans from 2%. Sounds really cheap.
Wow.
What they don't put there is per month.
Ah.
Which per year is 24%.
Yeah.
So not quite as cheap as it sounds. Not quite as cheap as it sounds.
Could be against the ASA rules, significantly against the ASA rules, but hey.
But we're not regulated. You have to remember this is not a regulated marketplace. As business owners, we are expected to know these things. We're expected to do our due diligence. We don't have to be regulated. Consumers are daft. They don't know anything and they need to be protected. But business owners should know everything. So that's how they look. So my last thing, because I know time's running out, is know what the monthly repayments are. Forget about the interest rate. So I'm just going to give you 2 examples. If you borrow 50k over 5 years, and you do it on an APR of 10%, it will cost you in total £12,741.13 in total.
Okay.
If you do it on a flat rate of 8%, which sounds better, the total interest will be £20,000.
Ow.
So they will never tell you what rate they're quoting until you get the paperwork.
Right.
So just understand how much you're borrowing, how much you're repaying, what's the monthly repayments, and can I afford it? That's the only question you need to ask yourself at the end of the day. Because if that works, if that last box is ticked, I can afford it, then you can take the money. If you can't, you must walk away or find a different lender. But please don't be fooled by the headline rates.
Okay. Brilliant. That's a super overview.
Sorry.
Super overview. So there's one question in the box, which is about how do I put together my business plan, and do I need an accountant to help me pitch this to the lender, to the bank, or whoever else it might be?
Depends how good you are with numbers. Is the answer. If you're really good with numbers, then you shouldn't need to, but you could use Simon. I mean, Simon would put together 1,000 different business plans and cash flow forecasts. I don't think you need to spend a fortune on it, but I would be looking at doing a 12 to 24 month at least kind of thing. But cash flow forecast is exactly what it says on the tin. You know, you might as well call it a cash flow crystal ball. But it has to be sensible, reasonable, slow, consistent growth is what they're looking at. Don't do that. Your cash flow should not be going, oh, give me 100 grand and now I'm turning over 6 million. Aren't I amazing? It just needs to be consistent, and but certainly if you're no good with numbers, get some advice.
That's a really good point. And I think the some of these, like the startup loan fund, for example, they have a series of templates, don't they, to put this information in. You don't have to create it from scratch. You can actually get the templates. So
it's really, they're very intuitive templates as well. It looks a lot, but actually you put some key information in that it feeds it through. So they're quite good. Okay.
And I think that's really important, because you could, and I've seen it quite a lot, you know, where you can get loads of people asking, starting to create their own plans. They're all in different formats. You've got PowerPoint over here and you've got something else over there. And actually, whilst that might help to get your head on straight, it's not necessarily the thing you want to be able to give to the lender.
No. Good. I think it's just, you know, like you say, just being honest and true to yourself to start with is the place to start.
So as a finance expert, Sharon, how much hand-holding do you have to do when you've got somebody that comes to you for a loan of any description? Is that, you know, is your job to take their information and pass it to somebody else and to get a set of offers available? How does it work? Just give us a quick, you've got a 60-second overview.
Okay, so the first thing we do is get under the skin of the directors and the businesses, understand what they need, trying to achieve what they want to do. We have to understand the past numbers. They're really important to us. And understand what their future is going to hold and what this effect this money is going to have. I then have to understand all their limiting factors, and my job is then to place them with the right lender to achieve the right result. And that could be sometimes a bit of a mixture of lenders or a mixture of products. But I would take you through the whole process and you have to provide me with the information, but I use that information and I go and do the rest of it. Present you with the offers that we can get you, then it's your decision as a business owner to make the choice.
Fabulous. So that's a very important job. And I know, as I said earlier on, we've worked together on quite a few things just lately. So true to say that you haven't failed me yet. Sorry, you haven't failed any of my clients yet, which is all the more
more importantly.
And you can probably tell Sharon has a sense of humour as well, and that helps enormously. So thanks a million, Sharon. I really appreciate your expertise.
Thank you.
I'm going to share the document that you was on screen when we first started with everybody, It's got your name and telephone number on there, so you're okay if people approach you directly for a conversation?
Please do. 100%, yeah.
Important to say, there's no cost attached to your services, right?
There's no cost attached to any of our front-end services. We do charge a small success fee when we're successful, but all the exploratory stuff is all free of charge and open for people just to get to know.
Fantastic. Fantastic. Well, look at that. It's bang on 30 minutes, Sharon. I love to finish on time. Appreciate your time. Thanks a million.
Thank you.
Good to see you.
Really nice to see you.
Thanks to everybody that joined. We'll see you again on Tuesday, 8 a.m. next week. Thank you very much.
Bye.